Hey everyone, what's up? It's me, Latoya, from over at theprofitroom.com. Today I'm going to discuss gaps. What are they? More importantly, why do we trade them daily? And how in the world do we make money on a consistent basis? Let's get right into gaps. Alright, so we are looking at BBY. BBY will be the example I will use to talk about gaps. Now just look at this chart. As you will notice, there is a gap here. This big E stands for earnings. So BBY, which is Best Buy, had earnings and it gapped up. As you can see, huge space, window, whatever you may want to call it, but it's known as a gap in the trading world. Basically, the closing price of this candle is lower than this. So a gap is caused when the closing price is either higher or lower than the prior day's close. So the close of this candle was $60.31. And then on this day, BBY gapped higher. It opened at $68.27. So the opening price of a gap is usually higher or lower than the prior day candle's close. And that is pretty much what defines an actual gap. So gaps can be caused by earnings, any news related event, economic, whatever, political. It could be a CEO that left the company or someone retired or something that can cause a stock to either gap up or gap down. Here's another example of a gap, but in this case, this one gapped down. So the close of this day, just notice that it closed at 55.37. It was higher than the opening of this day. So the opening here was 52.36, which is lower than the closing price of the prior trading day. That's a great gap. Another thing with gaps. Gaps are an everyday occurrence. They happen in the market all of the time. Doesn't matter which market, futures, forex. And this is basically the equity market stocks. And we are looking at different gaps. Now, another question we often get, gaps, when exactly do they close? Well, there's not a specific time. Some gaps can take years to close. Other can take days, some a few weeks. This example we're looking at right now, just look at here with the earnings. This gap down. When did this particular gap close in general? Alright, so once this gap down, we had a few days. So this looked like it took about 2.5 weeks to close this gap. And I can just count the candles. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So yes, about 2.5, give or take 3 weeks to close this gap. In order for a gap to close, you will want to see the low of this candle and the price basically fill. What I mean by that, there is no opening space, there's no opening void. That means that price target hit penny for penny. So that's the definition in a sense of actually closing the gap. Now we have another gap here. This is an earnings gap as well. This gap down. Just notice all these earnings gap, but we have another example where no earnings, but price just happened to gap down on this specific day. So here's the gap on earnings, and this one closed quicker than this gap, if you may notice that. So this one took about 1, 2, 3, 4, 5. Uh-oh, look at that. That did not necessarily fill. Look at the high of this candle and the low. That did not touch. We can see that over here technically fill the gap. So not that it was quicker at all. My bad. It actually filled over here. So the high of this candle is 81.66. This one is 81.53. The low of this candle was 81.42. So this candle filled this gap. So if we look at the high of this candle, you see 81.24, and this one barely hit 81, not going to the low of this candle, which happened to be 81.42. So the technical fill was over here. So let's talk about now, why do we trade gaps daily over at the Profit Room? As you notice, we do post every single day, and the majority of our trades, if they are not prior stocks that are on the watch list, we are trading the gaps daily. So let's get into an actual gap that we traded today, which happened to be DSW. DSW gapped down. They had earnings, another earnings trade. And we love trading earnings because it provides a huge trading range, as you can see. If you can look at the difference between that candle, you see how small they are. When you day trade, you need range. You need like a large range to really make some great profits. However, I'm not saying you cannot make great profits within this day or that day, but to really hammer in on profits, a nice range will provide that. So from here to here, DSW fell, and this is what we traded, or one of the gaps that we traded today. Volatility is within this actual candle. Let me give you another example. DSW, here goes earnings. You see how it gapped up? Look at that. Volatility was in this candle. The price opened up here and seller pressure took over, and the candle eventually fell all the way down here and closed here. Volatility and range is what we look for when we trade gaps. So if we break this down to an intraday time frame, let's say 30 minutes, or let's break it down even further, 15 minutes. Nice opportunity within this gap. Now over to a weekly time frame. Remember, I've also said that gaps can take years to fill as well. Well, gaps do occur on a weekly chart. What I find with weekly charts, that these gaps fill generally very quickly. We have a gap here with BBY that filled. It took about 3.5 weeks. We have another gap over here, and that literally filled within 3 weeks as well. So I just want to show you different gaps, more so on a larger time frame, so you can see that gaps are a regular occurrence.